Hey traders, welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into a topic that's been blowing up in the digital options world lately. Can you really trust digital options signals, auto trading bots, and copy trading features? The short answer? Sometimes. But more often than not, what's being sold to traders out there is hype, wrapped in slick marketing, fake testimonials, and unrealistic promises. So, in this episode, we're going to separate fact from fiction. Whether you've been tempted by a signal service offering 90% accuracy, or you're wondering if letting a bot trade for you is a good idea, I've got you covered. We're going deep into what works, what doesn't, and how to protect your capital from being chewed up by scams. Let's get into it. Digital options signals, what they are and what they're not. Let's start with signals. Digital options signals are trade recommendations, either created manually by human traders or automatically by algorithms. You're told when to buy, when to sell, and sometimes even what expiration to use. Sounds great in theory, right? But here's the problem. The industry is flooded with fakes. Red flags to watch for. No verifiable track record. If they can't show audited, third-party verified trade history, that's a no. Fake reviews and testimonials. Stock photos, suspiciously perfect grammar, glowing praise with no detail. It's all manufactured to sell you trust. Unrealistic profit claims. If someone guarantees 95% win rates every day of the week, you're being sold a fantasy. High pressure sales tactics. Only 10 spots left. This offer expires tonight. Classic marketing pressure to make you skip due diligence. A lot of these services are built to take your subscription money, not to help you succeed as a trader. Auto trading robots. Should you let a bot trade for you? Now let's talk bots. Auto trading robots, or EAs, or expert advisors, are designed to place trades for you. In traditional finance, algorithmic trading is legit. But in the digital options world, most bots are borderline scams, if not outright fraud. Here's why most fail. Zero transparency. You can't see how the bot works or what logic it's using. You're blind. They're tied to shady brokers. Many bots are exclusively partnered with unregulated brokers that manipulate prices, stall withdrawals, or simply vanish overnight. They don't adapt. Market conditions change, and most bots are too rigid to survive. They might work for a week, and then blow your account the next. And here's the kicker. Most of these bots are profitable only for their creators, not for you. They either collect subscription fees or get paid on the back end by the broker when you lose. If a bot can't clearly explain its strategy, doesn't offer live performance stats, and only works on one sketchy platform, it's probably not your friend. Copy trading. A middle ground worth exploring? Let's shift gears to something a bit more promising. Copy trading. Copy trading lets you mirror the trades of more experienced traders in real time. You still need to manage your risk, but you're not starting from scratch. Sounds better, right? It can be, but it still comes with its own serious risks. Things to watch out for. Hidden risk. Some signal providers use high leverage and gamble big to look profitable on the leaderboard. Past performance is not equal to future results. Just because a trader had a good 3 months doesn't mean they won't crash next quarter. Fees and commissions. Some platforms charge up to 30% in performance fees or ongoing subscription charges that eat into your profits. Copy trading can work, but only if you do your homework. Know who you're copying. Watch how they manage drawdowns. Understand their style before you link your capital to their decisions. How to vet a signal service or tool the right way. Thinking about using a signal service anyway? Cool. Just do it with eyes wide open. Here's your checklist. Ask for a real track record. Third-party verified. Not screenshots. Not testimonials. Look for transparency. Are they open about their strategy and risk management rules? Read user reviews on independent forums, not just on their website. Look for Reddit threads, trading communities, and YouTube reviews. Test it first on a demo. Any legit provider will let you see how it works without risking real money. Walk away from hype. If the sales pitch feels more like a casino than a trading tool, it probably is. safer alternatives to paid signal services. If you want to trade smarter but don't want to get caught in a scammy subscription loop, here are a couple of smarter options. 1. Use built-in analysis tools from regulated platforms. Some platforms, like crystalballmarkets.com, offer advanced charting, economic calendars, and built-in technical tools, all within a secure, regulated environment. You're not guessing based on a Telegram signal. You're trading based on clear, visible analysis, and doing it in a space that protects your funds and data. 2. Subscribe to free market analysis newsletters. A well-written newsletter from an experienced trader often provides more value than a paid signal group. You get context, education, trade ideas, and commentary on what's moving the markets without the pressure to follow blind trades. Bonus, you're learning, not just copying. The role of regulation, why it matters more than ever. Let's talk about regulation because it's the backbone of safe trading. Scammers thrive in unregulated spaces. That's why so many signal providers push you toward offshore brokers you've never heard of. But regulated platforms offer fair pricing, no price manipulation or shady slippage, segregated client funds, your money stays your money, enforced transparency. They have to play by the rules or lose their license. Bottom line, if you wouldn't trust a doctor without a license, don't trust a broker or signal provider without one either. Final thoughts. Tools can help, but they're not a shortcut. Let's wrap this up. Signals, bots, and copy trading platforms can offer some value, but only if they're legitimate, transparent, and well matched to your trading style. If you're looking for a shortcut, these tools will burn you. But if you're looking to enhance your edge, support your strategy, and stay in control, that's where they can play a role. My advice: be skeptical, be curious, and don't outsource your learning. Your best edge in the digital options market is you, your discipline, your plan, your commitment to doing the work. If you're ready to trade in a secure, reliable environment with analysis tools that help you make informed decisions, check out crystalballmarkets.com. It's a smarter way to trade digital options, backed by real support and real transparency. That's it for today's episode of Financial Market Insights for Traders. I'm Sophia. Thanks for spending your time with me. If this episode helped you see through some of the hype, share it with a friend, drop us a review, and make sure you're subscribed for more no-nonsense trading insights. Until next time, trade smart, stay sharp, and don't fall for the noise.